Hello guys, welcome to the Traiding Parrot. Yesterday was an amazing day for Bitcoin. We managed to break out on the 4-hour. In today's video, I want to show you a few insights that most people are not being able to see. Particularly, I'm going to compare the breakout on the 4-hour and I'm going to put the spotlight on what's going on at the moment on the daily. There are many people thinking that this is it, all-time high, comes tomorrow for granted. And in today's video, we're going to look in detail at what's going on under the hood. Let's lift the carpet. Let's look at the momentum, the ongoing battle to recover the previous range. I want to talk about that. And although we have to be realistic with our expectations on the daily and keep an eye and make sure that we tick that box before we get too excited about the next target, we're also gonna celebrate a few milestones that we are seeing on the weekly time frame. I want to share that with you as well. We'll look into the liquidity pools, what's left for the short term and the longer term when it comes to liquidating shorts and longs. I'll give you an update on the delta, which is just millimeters away from potentially breaking out to the upside. Of course, that is gonna play out if we tick those boxes on the daily time frame. I'll share all the detail on my thoughts today's video. Guys, if you like this type of content, make sure that you are subscribed to the Coin Bureau Trading channel. I'm committed to publishing 3 videos per week in the channel. Together with Dan and Aaron, we make sure that every day there are videos covering Bitcoin, tutorials, altcoin setups, and a lot more. And if you're like me and you want to stay on top of the price every day, looking at every single thing that Bitcoin is doing, understanding the reasons behind of price action, not just for Bitcoin, but also for altcoins with multiple videos a day, then make sure that you are subscribed to the Traiding Parrot channel as well. I'm gonna start the day giving some credit to the CPR model, which has been really great forecasting what was gonna come next. Think about this. If you were just looking at the CPR model and you pay attention that on the highs of December we touched the first resistance and you were aware of how the model works, particularly when it comes to at least touching once the level of resistance. If you're not familiar with CPR at these levels in here. In white you have the pivots, which are formed every month. Then you have 3 levels of resistance and 3 levels of support in red. The ones in green are the resistance and the first one is the bottom one that you can see in there. And we touch by the millimeter that level at $108.178 on Binance Spot. And that was a clean rejection. From there, that's where we place the order block and it collapsed the price around 16% since then. And the model says very clearly, all you have to do in the month is touch the first resistance and you guarantee yourself with a high likelihood that the upcoming month you should be able to hold the pivots and at the very least have another trip to the resistance of the new month, in this case the month of January. So far, from the top pivot into the resistance, that should be a move of 4.8k and we have already done 3.2k, so there's just 1k left roughly to 104.5 more or less to fulfill the forecast of this model. And it is something I want to give credit to the model because this happened in the context of forming a head and shoulders, which including myself, we were shouting about the head and shoulders, many accounts all over the place. But the distinction is that during this formation, we were dubiously speculating that there should be some bullishness in here, trapping shorts and eventually pushing higher. My expectation was to get to the middle pivot at 87.5, but we didn't even make it there. We actually bounced at 91.8, and from my initial order we have done almost 12% up. We have conquered the right shoulder, which is pretty much destroying the pattern. That was located at 99.5, and now we need to focus on where are we in the 4-hour, in the daily. What is the current context when it comes to momentum? Have we lost it? Have we broken any crucial support in any of these time frames? Looking at the price action is pretty revealing, but there's a lot more that we can do. Let's look first at the 4-hour time frame, and you can see that there is this descending channel that started on 12th of November. That means that the momentum has been diminishing with lower lows and lower highs consistently, but that trend broke on the 6th of January, broke the global the global resistance. And a few considerations for the people that watch consistently my videos. This is just pure beauty of the oscillator. For example, in here you can see that this hit that level. Indeed, that was a fake out because my line was like this. I had to rearrange the line like that. That is part of the methodology that we follow. We broke down this support in here. We found a pivot with a hidden divergence, and that ended up helping the RSI to finally break out and test and hold the green line as support. From there, since we broke down in here, let me do it with the line in white. You can see this is bouncing, breaking down and continuing down. When you do something like that relative to a line like this, my expectation usually is to come back. If we ever had anything bullish coming in, my expectation is to go somewhere and test that level as a resistance. And the move that we have last night did it millimetrically. Just precisely there it came to the scene of the crime, and it saw a small pullback from there. So what do we need to think about the 4-hour time frame? We need to be thinking that's fair enough, but this has been a quite impulsive move. Now we need to protect the level of new support that is located at 66, and we also have a new line coming in here touching this pivot there. So ideally somewhere around this confluence it will be really bullish for the 4-hour to protect it. That will make a lot easier to continue pushing into the 80s once again, assuming that this move is not done. Of course the move might be done. In that case we can expect a little bit more turmoil somewhere in here. So typical questions that I get in the comments. So does that mean that if we break below in here, this whole thing is done and we're going to 70k to 50k? No. Hold on the horses. This is just losing a fraction of the momentum. We need momentum to continue to make it easier to go higher, but losing a bit of it doesn't necessarily mean it's the end of the world. It just means a slowdown. Think about it as you're driving in the highway and you just release a little bit the gas. That means that maybe some cars are gonna pass by next to you. That is fine. We can still get to the target, but now we're gonna get a little bit later, or maybe we're gonna get distracted and just go somewhere else. If we hit the gas to the limit, it's a lot likelier than we are gonna get there. Yeah, of course, there can be accidents and stuff like that, but that's too complicated for a metaphor at this hour in the morning. So the takeaway of the 4-hour is to make things easier, let's protect RSI 66. If we still go to the median, lower in here, that is still mildly bullish. If we reset all the way here, there must be something wrong. If we pinch below the final support there, we are going a lot lower. So 66 and 52, we could say, are the levels that we need to protect this morning. So I'm going to write down those levels in the reverse RSI, and I'm going to see in the price where is that located. So to keep things very bullish and to just do that retest of the scene of the crime, we should not go beyond 101k, give and take. We have right below it a fair value gap of the impulsive move. So if the price got tempted to fill that imbalance, then it will reach a price of 99.5. That was previous resistance 1, 2, 3, multiple times in all this area and there. Can we afford to do that? Yes, we can. People are still going to see a move like this as a retest, is particularly considering that we couldn't cross that so many times. So just coming once and retesting there is still acceptable. And that is what the RSI is saying. That's what the price action is saying. And I guarantee you that psychologically people are thinking like that at the moment. Now, everyone will love in here just a bull flag there with continuation, right? So if we take this flag from there, from the previous bull flag, and we place it in here, sure, we can get to 106 and beyond. But to do that quickly, we need to protect this level. Okay, let's move on to daily time frame. Something extremely interesting is going on in here, and for that, I'm gonna show it to you, the contrast of what's going on 4-hour versus daily. You should be doing things like this on your own as well, looking at the big picture, okay? Zoom out on the 4-hour RSI, place your lines, and do the same on the daily. What do you see? Compare this channel with this channel. So 4-hour is telling us there was a channel to the downside, and now we are seeing some signs of reversal to the upside with a global breakout. So this is telling us somewhere in here should be where we are heading in terms of RSI values. The daily time frame is kind of saying the opposite, right? The daily time frame is saying from August, I've been already on a channel to the upside. I broke down, and what I'm doing now is hit that resistance from the long-term trend line, right? 1, 2, 3, 4, 5th time that we were there. On the 6th time, we broke below it. We did some bottom informations with a local breakout right there, and now we hit precisely that the white line once again. And it's kind of a mixed bag, and I'm gonna tell you why. Let's keep the focus here. We have this trend line that I'm gonna move and connect with that pivot there, and if we ignore this white line, let's remove it from the chart just once, and if you were just looking at this, you will say, okay, we have a breakout on the daily, and now we are retesting at 59. That is, perfect. Let's go with it, and if we retest that, we should be going now for the global breakout. Global because there's nothing above this, and then let's break out from there, and everybody's happy going to the top of the range. Sure, that is what you first see, but there is this line that I have to pay respect, because 5 times hitting it and then coming from below and stopping right there is telling me that is still a relevant resistance. So if we take out now this other line and we ignore it like this, let's take even this one to make it more clear. Do you see it? That is resistance. It's a serious resistance, and I'm not telling you it's the end of the world, but what I'm telling you is if you are in a swing long, attention with what happens in here. A strong rejection from there could indicate that we are going for a new low. That low could be located based on the statistics. Sometimes we reach that. If you watch my previous videos, you're gonna see how many times we do that. Or we could go to the final global support at 29. Why is it global support? Look, 1, 2, 3, that could be the 4th. We are in a channel down. So I'm not discarding that. And this is not a video to convince you that you can go up and you can go down. Don't be silly. It's all to do with if this happens, this has more likelihood. If that happens, that has more likelihood. If your brain can process that, and I'm sure you can, then pay attention to the ifs and focus on what happens next. If you can do that, you can become a great trader. I guarantee you that. If you're just focusing on you can go up or you can go down, turn off the video and go immediately to TikTok. You're gonna find awesome videos there, 5 seconds long, telling you to just go and buy. Go and do that and see how it goes. So I will say on the daily, what we need to do, hopefully as soon as possible, is to recover the RSI above this white trend line. This resistance is 63, I'm gonna say, and bear in mind that the longer we take to do that, the higher we need to reach. So if we see a rejection in here and we start taking too long, eventually we need to go back above 67. If we do it in the next couple of days, it's just 63, it could be 64. I will say I will start getting worried below 58 to 54. I will start saying, we are retracing too much from this impulsive move, and there is now an increased likelihood that we can come back. You can always do Fibonacci's between these levels and look for the 50%. Beyond that 50%, beyond the golden pocket on RSI as well, is not healthy, and it indicates that there is a stronger rejection. So that 63, where is that in the price? We need to move that. We were using 61, we broke above that already, but now the line is higher, so we're gonna put a higher expectation as well. So we need to break above 103k to do something that is not really evident in the price. No one sees that level in here in the price, but we do see it. We see that we were holding that as support, now it's resistance, and we need to break above that to start talking about global breakouts and new all-time highs. That's how important it is. Now, 4-hour and daily have their own tasks that they need to be accomplished. On the weekly, we are going to claim some victories today. We have to see the positive side in this. We have managed to close on Sunday what we wanted to do, which is 97.2. That was the level of resistance. We close at 98.5, and then we continue with another green candle in progress this week. That is very positive because this was support 3 times, then it was resistance, and it's indicating that we are kind of breaking out from a flag. In 2021, we didn't touch the bull market support band up until May. In 2016, we touched it twice. So we want to be on the 2021 side and hopefully not need to make another stop in here, particularly because this cycle, every time we go there, eventually we end up spending months below it, and it's no fun to be in the bull market below the bull market support band. Wells continue to their trajectory to 0.5 ratio of deposits versus withdrawals. That is something bullish, and it indicates they have confidence in what's to come. Institutions are buying. Retail is in a corner with a doll shaking and hoping to get an appointment to their therapist, looking to the other way and not taking advantage of the bullish moves. And that's mostly because there is no cash in the streets, in the pockets of retail. But institutions are having a party in here with 2 days with 900 inflows. This is just unbelievable. We are about to take the high and put a new all-time high in accumulations of ETFs. And as I say yesterday, retail is suffering big because they were in the past 2 days selling at a loss at record levels. This oscillator shows me that the SOPR was at the lowest level since October, when we have this move down and then we have a huge rally of 83%. Typically, when too many people sell at a loss, it tends to ignite a rally. And I was very surprised to see that at 98K, but it did what it usually does, regardless of, in this case, being a move up. And in this move, it happened on a move down, which is much more expected as a combination of a signal. You go lower and you get retail to get scared, sell at a loss, and then you can start rallying to the upside. In this case, we went up and potentially retail were buying there. And as we went up, they say this is our last option to sell before a huge crash. They sold, ETFs bought, and continue going higher. Again, on the weekly, we managed to recover above the support on the RSI for the full bull market, and we're getting closer and closer to confirm a bullish cross in the middle of the range on the stochastic RSI on the weekly. These two things are bullish, but we have to recognize that the RSI on the weekly is rallying after having lost a level. So it could hit some levels around here as a resistance. We will be covering that. We might need to place this line like this, potentially, but let's see how we close the weekly. Things move a lot slower. Obviously, it's a very high time frame. So let's focus. Daily needs to break above 103K. 4-hourly needs to retest the breakout on 66 to be able to continue, and we can afford to go to 99.5 or ideally 101 if we want just a bull flag breakout with a target of 106. That is the summary. Now let's look at the liquidity and let's see how easy, how achievable is that. Looking at the short-term liquidity, I don't see much liquidity above the price, nothing in red. The short-term liquidation level price was already taken. That was 100K. We talk about that at least 3-4 days before getting into 100K. So we cannot use at the moment the short-term liquidity. We're gonna proceed to the longer term, the 4-hour time frame on trading different. And we see that there is blue liquidity in there. That is just meaning that is less than what we get in the yellow or in the red. We have an incremental amount of liquidity that should be tempting market maker to go to those levels. We're talking about 118K, but believe it or not, I am still keeping one eye here at 88, 89. You might say, yeah, but we went all the way to the blue and we're halfway there and it's going to be increasing. That guarantees that we're going to 118K. Yeah, it is very tempting for the market maker now to do such a thing, but they have to battle and they have to win the battle against this line in here. That is a must. If we don't break above 103K and find support there, it's just gonna either not happen or take a lot longer to achieve it. And unfortunately, if I look at this at the longer term, I don't see any spikes of liquidity. Just 105 seems to be larger than 103. And we can say that if we start coming lower, liquidity only starts at 98.5. That is going a bit too low because that takes us back into the previous range. At the moment, RSI 66 is about to be tested. Maybe when the video goes live, it will have been already broken. We have a cumulative delta of liquidations of 555K. That is pretty high. The ask liquidity has been reducing, as you can see with the move up. That is probably a consequence of them getting liquidated and being forced out of those shorts. But also, it could be a combination with more longs entering at the moment. That is increasing the liquidation levels on the lower end from the short term. It's very interesting that throughout this whole move up, there was no excessive bid. It was just people shorting and shorting and shorting and getting liquidated. Now, this is how I left the last 30 days of liquidation on CoinGlass. Let's refresh. Let's see how it changes. It's very similar. We got 97 on the lower end. 97 is below the previous range. So if we were to go there, we can just touch that with a wick and come back up on the 4-hour or on the daily to make sure that we don't break structure and we don't end up calling this rally to 102 just a liquidity grab to take us back down to the 88, 89. The stimulus, the motivation to go to 103 is this area of liquidation there. We got 97, almost the same amount, which is definitely not making very easy to understand whether the RSI will be able effectively to break above the white line. And that's why it's so important now to monitor it. If you are in a long still, be cautious with that as a potential rejection. Looking at the volume profile, you can see that we did manage to get to the target of the top of the range, but we haven't been able so far to close above it. Maybe you can argue that slightly close above, but I'm not going to take that in consideration just because this range is defined with the 70% of the volume using the volume profile. You can see it in there. So it's a very arbitrary number, the top of the range. But yes, give and take, we kind of hit that top and now we are battling. We are in the middle of that battle. For me now, the top of the range is important, but what is more important is that RSI 63 on the daily, as I mentioned, at 103K. Fair value gaps, which you should read as motivation for price to close those gaps that you see in the screen. Below the price, we have this move that could end ideally somewhere around 99K. If we go beyond, we have 96.7, 95.1, and the huge vacuum towards 85. The target of this triple bottom in there was 108, and we have done a little bit less than half the target. We do have on the top end from 102.8 a fair value gap that ends at the 105 that should do the trick of liquidating obviously the 103K, but more importantly, allowing the RSI to do a healthy retest on the 4-hour and on the daily, assuming that that happens and it remains at those highs, a reclaim of the previous range above the white line. That will be perfect. On the NASDAQ, on the S&P, on the daily, we are seeing here a potential formation of a double bottom formation. That is immediately after some bearish signals with bearish divergences. You can see that NASDAQ and S&P at the moment are running behind Bitcoin. Bitcoin is acting like if it knew something and as a kind of a leading indicator. And if you don't believe me, just focus on this chart and observe that after this sellout, we form in here a double bottom formation. The neck is there and we have already exited that area. Whether we are going to hold that neck, that is a different question. But you can see how the NASDAQ is behind in that plan. You can see it hasn't even formed fully the neck there. And on S&P, we're kind of almost done doing the neck, but not yet there. Bitcoin is somewhere in here already. Although the sellout of Bitcoin was from higher, you can argue as well. But in the defense of Bitcoin, Bitcoin already broke out from the double bottom formation. The S&P, if it did break out, it will be very close to an all-time high. There are different asset classes. Sure, DXY has put 3 days in the red and is holding support there. We really want it to start coming back below previous range to form a weekly lovely red engulfing candle that will be lovely, which in combination with this potential double top formation on the RSI is all we got at the moment to say, yes, the dollar could be turning bearish. Now, putting my RSI hat, you can see that is just a great breakout on the dollar. Yes, there is a double top there, but if this continued in the next week and does something like this, it is doable. And we don't want the dollar to rally. We don't want the gold to rally either, which is having some couple of weeks with green, not a lot, but you know, there is forming some sort of squeeze in between this and that. Hopefully that's gonna be a breakout to the downside. Guys, if you want to trade Bitcoin, Ethereum, or any altcoins, I will consider opening an account on Bybit or OKX, or maybe on both of them. They offer the largest array of altcoins, not just on spot, but on future perpetuals, access to trading bots, and all advanced tools that you can ever imagine in an exchange. Not to mention the largest bonus in the crypto industry and great discounts on fees. But if you want to stay away from needing KYC, considering open an account on 2Bit. 2Bit is an exchange that has been built by people that work at Bybit. The user experience is very similar, and the main advantage of not needing to do KYC when opening the account is that you can open as many accounts as you want with different emails, not needing to use VPN, withdrawing and depositing whenever you want your crypto. And by using the links in the description, you can claim not just the bonuses, but also the discounts in the fees while supporting the channel. Thanks so much for watching, guys. I'll see you in the next one. Bye bye.